And let's talk about China, because I know you've been tracking that very closely. And the last time we spoke, you were constructive on China, but I believe you are even more constructive on China today. The yen is at a record low. US bond yields are rising. India may or may not be seeing FPIs come in lock, stock and barrel, and that could have to do with our local factors such as the elections. Where does China stand, and how much of China's potential inflow could eat into India's pie?
Well, before China, very quickly India, because we do really like India, but it's just a market that's performed so well. It's rather expensive, so we say, maybe we should wait until the slightly better time. But it's a market that we effectively still like. China's almost the opposite. China's got an enormous amount of challenges to deal with that are well presented in well, you guys have talked about it as well, property, economic growth, and all these sort of things. But we've seen such a massive sell-off that now China, a lot of people say, hey, maybe it is a bit overdone. And it comes at a time where India is expensive, and you see that there's some strange things going on with the yen. I mean, I'm not quite sure what happened this morning exactly. It looks a little bit awesome at the moment, but you see that the Japanese stock market is not really responding to that as it did in the past. It's not rallying much higher. So I have the impression that people are reallocating some money from Japan into China, not so much from India really, but from Japan into China. So China, interest in China is really picking up.
Are you buying more China than India? Or recommending more buying in China than India?
So at the moment, actually, we like both markets, but the way we like them is very different. China, I see, is a market that might do well, and in the near term, it's oversold. It's a sort of a tactical adjustment that we take to China. So for the moment, I think it will probably do a bit better than India. But if you ask me, hey, 12 or 24 months out, which market do I prefer? I would prefer India. So because India is a very different story. That's why I think we should not see these markets as you sell one and go to the other one. These are like apples and oranges. They're really different. And they give you a very different sort of exposure. India gives you a nice sort of long-term growth story, very, very multiple growth drivers, not a lot of risk on growth, but valuations high. And China is the opposite. A lot of risk on growth, but hey, valuations are really low. That's why I think you should probably have both actually in your portfolio at the moment.
They've become mutually exclusive in the recent past.
Yeah, something like that.
And that's interesting, right?